Still not showing. All right, I think I'm good now. Yeah, yeah, yeah. I think it's good now. All right. Good evening, everyone. Welcome to Crypto Pulse Weekly. Um, I hope you've had a nice week. Sorry we couldn't meet last week as promised because yes, there was the World Cup and I wanted everybody to enjoy the matches. Tonight's Crypto Pulse Weekly is the penultimate for the year, and I'll be taking a break for the most of 2023 because 2023 is a busy year for me. But from time to time, I will drop videos and inform people who are on the WhatsApp group in terms of if there's any adjustments they need to make or any positions they need to take. I will do that as the need arises in 2023. Be that apologies once again. I think the I think the winter weather. I think the winter weather is affecting the internet. Um, I tried to use a different internet for the computer and for my phone on Instagram, but it still didn't work out. So the internet's been acting funny. I don't know whether it's a cold. It's minus 3 degrees currently. So maybe it's the cold that's affecting the internet. But sorry about that. Yeah, as I was saying, this is the penultimate Crypto Pulse Weekly that we're having. And yeah, for reasons I've already mentioned on the channel, I want to put myself in a position where I'm prepared for the next bull run. I already have my stats sacked and I'm actively dollar cost averaging and multiplying my streams of income. If you miss out on buying crypto in the next 6 months, then you can't expect to be a millionaire in the next 2 years. That's just the truth. And if you followed me up until now, I think it's just you should give yourself that 18 to 24 months plan of significant wealth accumulation in the short term. And that's because, as I was saying earlier on, once quantitative easing stops or quantitative tightening stops, which is pretty much beginning of Q2, according to my postulation or projection, once that stops, what it means is that the US dollar is no longer attractive. As a result, the stock market becomes attractive. It might not, to put it in clear terms, it might not happen within that 3 months. It might take another 6 months of consolidation before the market starts picking up. But what I'm saying is, whatever price you see after January is a major buying opportunity. And like I said earlier on, if you take a look at the charts I have on my screen, let's do the Bitcoin charts. I've said many times over and again that as far as I'm concerned, the trend is still pretty much downwards because we've not made any significant upward gain in the last, well, it's gone up in the last 1, 2, 3, 4, 5 weeks, but it's not gone back to the 20K period that it was 6 weeks ago. So what this tells me is that either this week or next week, going into Christmas, we're going to have a leg down. Now, if we have that leg down, I expect another leg down that touches the baseline of 10,000, 10,500 or 10,600 region, which is essentially what I'll call the top of the market before the market started pushing up significantly in 2020. For the guys on Instagram and YouTube, don't mind my look. I just literally woke up. I remember that I was supposed to take this session today, so sorry for the rough look. But I needed to point this out because some people are worried during the week about Binance, and people actually were calling and saying, should we move our money out of Binance? Should we? Somebody wanted to quit crypto altogether, and I was saying, just calm down. It's your money is not going to get lost, quote unquote. And the reason I put that out, just to explain, was that there was a lot of fear, uncertainty, and doubt being pushed on social media concerning Binance. And when you have that kind of situation, there is a lot of run on the bank, quote unquote. People want to withdraw their money because they feel something is wrong. I made that announcement because of the guys in the United States, because for them, they're operating with a separate entity of Binance, which is Binance US. Now, Binance US is a separate legal entity. It's not governed, it's governed by the US law. It's essentially registered with the SEC and all that. So they are tightly regulated. And because of that, if Binance is going to fall under any hammer or problem with the United States government, you can be sure that it's going to be Binance United States, because that's the one that's registered in their jurisdiction. The global Binance company is not registered anywhere, really. I know they were trying to get a license to register in Dubai, but technically speaking, they weren't registered anywhere before then. However, having said that, Binance is not a new exchange. Binance came just at the cusp of the last bull run. And when they came, they even, yeah, I remember that story. They were doing airdrop, 100 BNB airdrop for the first people that used their website, their exchange. If you collected 100 BNB at that point in time, I think that, hold on a second, I was giving that analogy, which day was that? Let me just show you what the chart looks like for Binance. So if you collected that 100 BNB, when Binance started, which was around 2018, late 2018, it was worth pretty much around $1. Yeah, but some people got it for 40 cents. But the ones that got it for free, the airdrop was free, they got it for free. If you had 100 then, and you managed to sell it at $680, that would have fetched you $68,000 free money at the end of, not even at the end, let's say April 2021 would have fetched you $68,000 or $60,000. And what distinguishes Binance, and the reason I'm going into this story is so that you understand, the different exchanges and the context. So Binance was founded by Shang CZ, as we call him, Shan Peng or something like that. San Xiaopeng, yes. Zhang Xiaopeng, that's his name, CZ. And he used to work for, I think, Reuters for a very long time. No, Bloomberg for a very long time. He was a trader, all that stuff. So he had more than 15 years industry experience below his belts. He heard about Bitcoin from his friends, sold his house in, I think, in Hong Kong to buy Bitcoin in 2013 or thereabouts. So when Bitcoin boomed in 2017, he made a lot of money, decided to, start the exchange. Now, I've listened to the guy severally. So if you listen to someone, you can tell what their frame of mind is regarding whatever they're doing. And what I can say, and this is not a paid advert for Binance, but what I can say is that he has the Zen approach. Let me use that word for lack of a better word. He has the Zen approach to wealth and to business, generally speaking, because you could see that it wasn't too much about the fame or the money, but it was about, this is a new technology. We can really build on this new technology and we can make something good out of it. And those philosophies have reflected themselves in the organization, has structured itself in the last 6 or 7 years. One, in that they've gone from being just an exchange that has a token to starting their own blockchain, meaning there's a Binance chain. In fact, they have two, because there used to be Binance BEP2 chain, the Binance legacy chain or something like that. Then there's the Binance Smart Chain, which is the BEP20, which is the new blockchain that they migrated to. So they've gone from being a token on Ethereum network, that's what I'm saying, to having their own blockchain and to propagating that blockchain in such a way that it now has so many projects that are running on Binance Smart Chain. So many projects, so many launches, so many developments going on Binance Smart Chain, so many NFTs, literally following in the stead of Ethereum with the addition of being an exchange. And the reason I say this is because FTX has brought a bad name to crypto, even though FTX is not a crypto company, really and truly. They just use crypto for convenience. That's my assessment of FTX. FTX has all the trappings of a normal, brick and mortar financial fintech company, but they saw the opportunity in crypto and decided to leverage. And not only did they leverage, they over leveraged with not just their money, with customers' money. They were trying to do what the banks do, what you call fractional reserve banking. They were trying to do fractional reserve banking with customer money. And then they were betting big and leveraging their money and spending like crazy. But one, FTX was a very young company that came to the fore. Two, the guy is 25 years old. I don't know how much work experience he has at all, not to talk of management experience. The kind of findings that those guys that were doing an assessment of their books were talking about, only someone who is a fresher in the business will be doing those kind of things. How do you operate a business of a customer? You don't have a ledger of your customers, your vendors. There is no list of your bank accounts. You don't have a concise list of employees. You don't have contracts with the employees accessible anywhere. Literally tons of documentation gaps everywhere. So it tells me that, these guys they were not looking, they were just, winging it as it were. And because it's almost like the guys were, they had very strong backers and the parents were very connected. So they were getting away with a lot of things that an ordinary business person or entrepreneur will never get away with, even in the real world, not stuff of crypto. So they're a bit different from Binance, Binance has proven itself in not only expanding the business from the original exchange business to all these other aspects. And now what they're doing is they're now involved in advisory, they're getting regulation, they're buying up other exchanges. So when the issue came and they said, Binance is in trouble and everybody was shouting, and I was like, these guys are not young guys. I mean, Xaipeng is closer to 50 than 40. That I don't expect that they will be leveraging or they'll be hyper leverage like you have with FTX, where everything was just swung at the everything was they were betting the house, really, literally, in FTX. Secondly, because they do have strong probable reserves. I mean, a company that has almost 600, is it 600? Yeah. A company that has almost 600 billion is more capitalized than most US banks. That's just the truth. If what they're saying is true, that their token is about 600 billion. So, I mean, a bank run of 2 billion does not dent anything. And I mean, really, there's no problem with a bank run if the bank is not leveraging money. The reason why a bank runs cause problems is because most banks are doing fractional reserve banking, in which case they collect 10,000 from you, they go and use it to do transaction of 100,000. So because of that, if you ask for your money, they've not just loaned your money out to other people, they've also used it to go and trade. So you can't get your money back. That's why bank runs have problems. If what you put there is what they have left there, and they have not been using it to do other things, you get your money back. So I wanted to say this because a lot of people have been disturbed. I've been seeing, the feeds on Twitter as well. A lot of people have been wondering, this Mana is going down. Mana is not going anywhere, because not only are they not structured the way FTX has structured itself, they're more stable in terms of the operating model. The operating model is solid, completely solid. And because there's Binance US separate from the main Binance, so even if the United States government wants to wage a war against Binance, they're only limited to Binance US because that's the operating entity in the United States. Having said that, the fraud, of course, has caused some downside to BNB in the last, literally in the last 3 weeks. Now it's down by, you can say, 20%. I think it's a good time absolute good time to buy. I do not think that BNB will go below 200 before the market recovers fully. So if anybody is particularly interested in BNB, now is a good time to start loading up. I think it will drop a little lower, maybe like 220 or 200, but I don't think it's going to breach the 200 level based on what I see on the chart now. This is a weekly chart, so it's not a noise chart. This is a reality chart, quote unquote. The worst case scenario, which is not likely, is to find BNB come back to 47, but that's not likely, and I will explain myself. Based on this, actually, should I use this one? Yeah, I can use this one. Based on these charts, the reversal points for Binance, if all comes to worst, let's say there's a disaster or there's a bad news about Binance, the point of return, technically speaking, is around 110 naira, $110. But as I said, technically speaking, I find it hard to see how the market is going to get there. It might, but I don't think it's going to get to 100. I think it's a struggle to get to 100. I think 200 is more likely where I see the price before the market start making a return. On the other hand, Bitcoin, Bitcoin, I still maintain my 10,600 level. It doesn't look nice, but it is what it is. But when it gets to that level, you will see that the market will react violently. That's because, technically speaking, that's the floor. So if the floor that does not hold, then it means that the whole structure of the Bitcoin price action is completely null and void. But I very much doubt it. Again, because everything seems to be lining up with itself. So the bottom seems to be very close now. At the same time, the Fed has started reducing the rates. Once they apply this 50 basis points, They probably apply another 25 basis points, depending on how the economies react. If they feel that the economy is getting strangulated, of course, that's the end of quantitative tightening. Once quantitative tightening ends, money printing resumes. That's the implication. And when money printing resumes, you will start to see the stock market down. So like I said to everyone that cared to listen 2 weeks ago, if you're a stock guy, 2023 first quarter is a buy position. That's free alpha for any stock people that are stock investors. 2023 January, February, March. I think the equities market will start to see. Let me even go there. We'll start to see some recovery. So this is the equities market. Typified by S&P 500. Yes, I expected this downward trend, but what I think is that we might only just bounce off the 3,330 points on S&P 500 before the market starts to pick up again. At which point, hold on a second, at which point the overall S&P 500 trends, just give me a second. Yeah, this is making a lot of sense technically, actually. So at that point, yes. I see. Okay. So I see. So overall, in terms of the uptrend of S&P 500, the 50% retracement point is 3,005, and that's why the market took that bounce, that strong bounce when it got to 3,505. If it tries it and doesn't breach it again, that might be the bottom for the market. But if it breaches it, 3,330 is the last, or 3,194. After 3,194, I don't think the market's going to come down. By that time, I think quantitative tightening will have finished. So the equities market will start to grow. So what does all this mean? Like I said, the strategy is very straightforward. Wait for Q1 2023 and let the markets decide its direction. Right now, it's still going down. And that's just because as long as this rate increase has been applied, it will continue. If you remember when I talked about DXY about 3 or 4 weeks ago, I did mention I was looking out for this demand zone around 1,103, 104 region, and yeah, it has not disappointed because the price has bounced off that zone again. I think that after this bounce, if it goes back to the 110 region and can't succeed or doesn't succeed, then we're sure that quantitative tightening will definitely come to an end. So for the benefit of people who are joining for the first time or people who don't understand what I'm saying, quantitative tightening is a countermeasure that the central bank, especially central banks generally, but the Central Bank of the United States, also known as the Fed, quantitative tightening is the activity that they engage in to reduce the supply of money in circulation. They reduce the supply of money in circulation because when there's too much money in circulation, there's inflation. They oversupplied money into circulation during COVID because everybody was misbehaving. Everybody was misbehaving, to say the least. So now they are taking corrective actions to, wind that down and siphon the excess money in circulation. I don't want to go into the details of, is it morally right? Should they do it? Should they not do it? I'm not an extremist. When it comes to macroeconomics, I'm not an extremist. I'll consider myself a centrist, because when you get into the details of why they do what they do, you understand that, okay, that might be a better alternative than allowing chaos and breaking the total world order. It's easier to continue to feed the system on credits as opposed to allowing the market to know its true value. It's more politically expedient, and most governments will prefer that than any other thing. So it's going to continue. So when there is too much pressure on money and inflation is coming, they withhold the supply of money and squeeze the economy, and the economy goes into recession or depression, depending on what it may be. But once that starts to happen, you first see it first in short-term assets like stocks, equities, and all that. Once that starts to happen, after a while, it gets to the housing market. So they don't want to get to the housing market because that will mean proper economic damage. What they're doing now is reverse engineering recession. But if the housing market starts to take a hit, then that's proper true recession. What we're doing now is just we're creating artificial recession. So until that exercise is done, the markets are not going to recover. But I'm saying this repeatedly because I won't have time to be creating videos in 2023, 2024, to be honest. I won't have this kind of time. But understand that when quantitative tightening stops, the market is going to go ballistic. Very ballistic, actually. One, because institutions and some governments have seen how the US can have a stranglehold on other governments because of the power of the dollar. So I think some governments will start to weigh in deeply in taking positions on things like Bitcoin and crypto generally in the coming years. And that's going to, I mean, I don't want to think about how far the price will go, but whatever the price, your price target is, I think the market will exceed it. Personally, I think the market will exceed it. One, because we usually have about 7 years or 8 years of economic cycle in terms of boom and bust, meaning the stock market goes up, comes down, goes up, comes down. It does a mini one around 3.5 years, and then it goes up again. So if you take this current year and the next year as the bottom of the crest, quote unquote, then it means the next 3 years we expect to see a meteoric rise to the top before you have any significant correction. It's a good opportunity to make money and take positions. So that's I think that's the reason, the main thing I wanted to talk about. So there's nothing to be afraid of in terms of is Binance. I mean, they would do $1.6 billion from them in 24 hours, and nothing has happened because there's nothing to it. The only reason you can be afraid of a bank run or a run of money is if the money has been kept with the exchange and the exchange has taken the money and have done something else. Then when everybody's asking for their money, they don't have it. But in the case where the exchange has the money and they're making their own money because a lot of people are trading, a lot of people are doing all sorts of activities using their various services, then really they don't have anything to worry about. And of course, somebody was saying that if Binance fails, crypto is going to go down. Wait, Binance only came into being in 2017, 2018. Crypto has been around for almost 7 years before that time. So Binance going down is not going to do anything to crypto. The price might go down, but it's of non-effect. To put it in perspective for guys, before 2018, there was no exchange like Binance. The major players then were Bitfinex, BitMEX, Bittrex, what's the name of this one in Canada went bust? Mt. Gox. Those are the biggest exchanges of the 2013, 2015, 16 period. All those exchanges now, the ones that are still around, so you still have Bittrex, you still have Bitmax, you still have Bitfinex, you still have BitMEX. Even Bitmart, I think Bitmart came much later. So those guys are still around. And I mean, those guys hold the original OGs of Bitcoin. They are Bitfinex guys. Those guys are the ones that hold the largest stash.
I think Bittru was also there.
Yes, Bittru is there as well. Those ones are the ones that hold the largest stash of Bitcoin, raw Bitcoin. Those guys were the original Bitcoin guys. So many of the guys now that are coming into crypto now are really altcoin guys. They're not Bitcoin guys. They're crypto and altcoin guys. Like I said, Bitcoin and crypto are different things. I don't know if anybody remembered that when I said that 2 weeks ago. That Bitcoin is a technological standard, and crypto is just everything else that has come out as a result of Bitcoin. Understanding that singular concept can make light years of difference in your life in the future. Because then you understand that if you hold Bitcoin, you're not holding it because you just want to make money off it. You're holding a digital asset that is backed by 40,000 plus nodes, that is immutable and indestructible. That is the only place you can hold value, and you are sure that it cannot be destroyed. It cannot be taken away from you, except, of course, somebody takes away your keys. But there is nothing else secure as that. And people now know that. More people know that. More governments know that. So when all this dollar charade, as I call it, this dollar charade is gone, and quantitative easing starts, and they start pumping money back into the system, the prices will go crazy. So that's my view. Because DXY is going up now, I think DXY will attempt to at least correct. Let me see if there's a possible, as you say, it's a possible pattern on the 4 hours. Yeah, it's a bit different. Yeah. Oh yeah. So it's broken down. It's broken down on this channel, on the descending channel, or descending triangle, whichever one. So I expect that, yeah, it should try to, come back to 108. Yes, 108 or 1. Let's see. Yeah, 108 or 107. If it comes back to 108 or 107 from the current price of 104 and it doesn't hold at those levels, then it is confirmed that the market is beginning to price in the quantitative tightening that is about to stop. So usually, the market is also watching events and reacting accordingly in true time, in real time. And the behavior of the price action is always a reflection of the opinion of the market. So as this is coming down now, we can actually draw another channel. Let's see. Yeah, as this is coming down now, chances are that it breaks up. But if it breaks up and it's not sustaining the break, as in if it breaks out to the upside, so this is a descending channel or is a falling wedge. Falling wedge, usually more statistical odds of going up than coming down. So if it goes up like it is expected, ideally it will go up, break out, then retest the descending channel before heading upward further. But if it breaks up and doesn't hold in the upward reaction, then it's going to break back into the channel, and that means further downside. That would completely agree with the macroeconomics of the Fed's quantitative easing and tightening, and that would then mean that equities, crypto, and Bitcoin will start to receive inflow from then on. Simple analysis took me about 2 or 3 years to figure out all the missing pieces. I had the missing pieces on the crypto part for a while, but I didn't have the missing pieces on the macro. But I have the missing pieces on macro now. And if you follow what I'm telling you, not a financial advice, but it will make you rich in 2.5 years' time. Very rich, depending on your level of investments. All right, so thank you very much. I think that's it for today. I was going to talk about the wallet, but I think I'll talk about that next week, because I needed to address this Binance for that people getting afraid of maybe they were going to lose their money on Binance or stuff like that. So if you don't have any question, I'm happy to give you back 25 minutes of the hour, and do have a lovely week, everyone. Dr. Lallery seems to have a question. Go ahead, sir.
I just want to ask, I don't know, I've started trying to see how probably they will start linking paper with MetaMask.
Sorry, I didn't understand what you said.
Paper.
Yeah?
With MetaMask.
You saw in news about linking paper?
Yes, yes, I read it in the news.
Well, it's not impossible. So I will tell you two things that have happened in the last 6 months that were not happening before. One of them is that on Trust wallets, if you have Trust wallet is a warm, I don't want to say cold, it's not a cold wallet, it's a warm wallet. It's a wallet on your app. It's decentralized. You control the keys, you can control the asset. It's a decentralized wallet that was formed by some guys. I can't remember who they were, but they got bought over by Binance a while back. Trust wallets could only accept the movement of crypto in and out before now, but they did some upgrade this year, and I just by chance I can't remember what I was trying to do, and I just saw buy. So I was like, really, what can you buy from Trust Wallet? So I decided to pursue it. When I got there, it gave me 4 options. There were 4 payment processors that you could buy with. There was MoonPay. MoonPay, I think, is a Chinese payment processor. There was Simplex. There was another one that just joined. I just saw that one this week. Then there was Apple Pay. Then there was Binance Connect. Apple Pay, I know, of course, which means if you're using iPhone and you're in the Western hemisphere, like Americas and Europe, your Apple Pay, you can link it to a card, and then Apple Pay will just pay for anything you want to buy. It can pay for, in fact, it can pay for contactless for limits usually acceptable for your card. So in the UK, contactless limit is £100. Apple Pay can do more than £100. I don't know what the upper limit is, but I know it can do more than £100. Yeah, so I know it can do more than £100 on contactless. So what happened was, it gave me the option of Simplex, Binance Connect, one other one, I can't remember the name of that one. So when I went into Binance Connect, because what I understood by Binance Connect was it would try to link my Binance account. So I said, okay, let's do that. And the percentage they wanted to charge in terms of transactional cost seems to be the cheapest. So I said, let's do that. So I click on Binance Connect. It took me into the browser, and asked me to put in my Binance details. Of course, because it was on the same phone, I put in the details, and then it linked my Binance account and makes the purchase on my behalf, and then sends it from Binance account directly to my Trust Wallet. All this on Trust Wallet, by the way. So I'm not surprised if MetaMask is trying to do something like that. But I'm not going to, how am I going to say, I'm not a fan of PayPal. From that perspective, I'm not a fan of PayPal's incursion into crypto. PayPal is not a crypto company. They're just trying to benefit from the right. Let me use that word. So, while it's a good thing because it means that you can fund your PayPal wallet, PayPal account from your MetaMask wallet in a country like Nigeria, where our bank cards are almost useless. So it might be a good thing. Okay. But for everybody's knowledge, you can now buy crypto, especially for guys in the UK. If they are trying to stress you, like my bank told me that I'd exceeded my limits to send to exchanges. One day, like I think that was that last week or week before the last. You can bypass it by buying directly on the MetaMask wallet, because if you have Apple Pay, then you can just use Apple Pay to buy. It's going to charge you a fraction, maybe like 1.8% or 1.9%.
Okay.
But you can buy directly. You can buy directly to the wallet. Even on Binance now, you can buy directly to the wallet with Apple Pay. But in the UK, some banks are restricting people from sending their money to the exchange. I'm like, it's your money. Why are they, So I understand that the banks know that, this is going to bring an end to banking as we know. It's a battle that will go on for a while. It's inevitable, but that's all right. So that's what it is, Dr. Larry. Any other question before we call it today? All right. So see you next week. I think next week is the last for the year, and the last for a while. It's definitely. See you next week, and have a lovely weekend.
Doc, this one, I saw you. Can I go ahead?
Go ahead. Go ahead.
Can you? I think there's some of these crypto traders on some certain platform who have also been spreading feud about KuCoin and crypto.com, saying that they will operate nicely this year, but next year they are going to have issues. I don't know whether you have also you have some information about that.
Yeah, I had some information about crypto.com, and I think I mentioned it on the WhatsApp group that if you want, you should move your money away from crypto.com. They are behaving in funny manner, and I'm not happy with it personally. So it's almost linked, it's almost lending credence to the fact that they might be having problems. So I'll tell you a personal experience. I transferred USDT to crypto.com from Bybit. I had some USDT on Bybit, so I wanted to transfer it to the card because I usually use the card on some payments. So you automatically take some payments from that particular crypto.com card. So I transferred the USDT, but just before transferring the USDT, or the about 5 days before I transferred some, I was doing a second transfer. So the one I did previously, I noticed that in the network options, there was Kronos network, there was USDT, and then there was Binance Smart Chain. So I was like, oh, I never saw Binance Smart Chain on deposit before. So I like, let me try Binance Smart Chain. So I went ahead and did it because Binance Smart Chain is really fast and cheap. So it got there quite quickly. So I was like, oh yeah, why would I want to send on Ethereum if Binance Smart Chain is also processing, USDT transactions for crypto.com? So I just left it there. And when I wanted to do the second transfer 5 days later, because I had whitelisted that address on Bybit, so I just sent it through the address. After a while, I just discovered that, the money should have been there. The money didn't show up. So I now went to the wallet. I didn't see anything. So I now went to deposit to say, I thought I saw Binance Smart Chain last week. They're taking off all the Binance Smart Chain options on deposits. So I sent a message to the support and like, what's going on? I've done this. I did this 5 days ago. So I just did it this week on Monday. Today is Friday. I've done it again. And now I can't find the Smart Chain option in the deposit. And it's the exact same, wallet address. So after a while, they came back and said they will look into the issue, blah, 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 blah. Then it took them like forever. Then they finally came down and said, actually, there's technical issue, blah, 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 blah. I should send them the transaction hash. Of course, I need the transaction hash. I copied it from the transaction. I sent it to them. Then they came back and said they will forward it to the guys. They will look into it. Long story short, that money has not returned back. They said they will return it back. So I said, it's very simple. You have the transaction hash. You know how much was transferred to that whatever. You have two options: credit my account or return the funds, because it was on chain to that particular wallet. So they said, okay, they're going to credit accounts, but I should confirm the deposit account. So I sent them the originating, wallet. Till now, they've just been telling me they're working on it. It was later I found out on Twitter that other people have been having the issues where, their what's it called, deposits are hanging with crypto.com. So I'm like, what the heck? Anyways, if you have money on crypto.com, withdraw your money on the basis of that, because I think just talking about it now just made me annoyed. Like, withdraw your money from them, because I don't know what's going on with them. But frankly, don't know what's going on with them. I think they're probably okay. They'll probably be fine. They might do a few more gimmicks, maybe change the name of their token or something. They've done it in the past, but they'll probably be fine. The user base is a lot bigger than what it was before, so they'll probably be fine. KuCoin, on the other hand, I don't think the reason why people are raising eyebrows about KuCoin was offering some very ridiculous return rates for, I think, for Bitcoin, Ethereum, and USDT. So everybody was like, these rates are too outrageous. Like, it means that they must be in trouble and need money badly. all exchanges, most exchanges, let me not say all exchanges, most exchanges are running, raising money. They've been doing Series 1 funding in the recent time. So I can imagine that, yes, you know, they're tight on cash. But yeah, I mean, they're established businesses in the real sense of it. I mean, like Crypto.com, they have all sorts of products. They have the card, they have the yields, they have, you know, all sorts of things. Of course, I imagine that they'll be spending so much money on all their sponsorship deals and all that, which is probably why they're running dry. But at the same time, they're established businesses. If they can't take a loan, they should sell some of their shares to companies that can give them money. So I don't think it's a if they have money problem, that's their CEO's problem. It's not a company's problem, really. You should fund the company. So KuCoin, I think, is fine. I don't have money. I don't have money in KuCoin, to be honest. I moved my money there a long time. I think the last time we got hacked was when I moved my money. But I still use them if I need to, but I don't need them right now. I don't even think I'm using more than 3 exchanges right now, apart from wallets. Bybit, yeah, Bybit. Okay, maybe 4. Bybit, Crypto.com, Swissborg, and Binance. So if you're not comfortable with Binance, you can move your money to wallets. But if you're on any of these other exchanges, just move it to your wallets. But I think Binance is fine. I don't think anything's gonna happen to them. So personal opinion, but that's my take on KuCoin and Crypto.com.
Sorry, sir. When you mean wallets, like
Trust Wallet and MetaMask.
Thank you.
But try to put your MetaMask on the phone or on the tablet. If it's a significant amount of money, then have a separate phone. Have a separate phone, a separate smartphone that just has that wallet on it, and you're not using it to make calls. So the only way to connect to access that phone is if you connect it to internet via wireless or something, via Wi-Fi. That would be my best advice for people, you know, wanting to secure, because what that means is that it's not connected to the internet. If you put it on your browser, anybody that hacks your browser can just wipe your wallet at the instance. So that's the difference. Same thing with Kronos. There's a Kronos wallet as well for Crypto.com. If you want to put money in the wallet, then make sure that the device is not a device that is going online most of the time, so that you can just, you know, disconnect it. It will be as good as if you had a Trezor or Ledger wallet, cold wallets. So that's the advice I will give in that regard. All right, guys. Thank you very much. Have a lovely evening.
Okay. No, thank you very much. Bye.